Aloha and welcome to Java. Thank you, Kylan, for joining me. This is for a short week because today is Labor Day. So happy Labor Day to all of our friends who are in the United States. Hope you're having a great holiday. It means I got to spend an additional day with myself, kind of diving into research. So with this, it is the 2nd of September and it is Monday. We've got a few things to look forward in this week coming ahead. So let's get right into it. Starting with our favorite risk indicators, the MMRI rising as 246.9 right now, and we've got the fear greed meter solidly into greed territory now. In the green, we've got a lot of people dumping money now into the stock market and also watching some of the upper end money, although it is rotating into different sectors. So I'll talk about that in just a bit. So with this, we've got the elements of these indicators, namely the 10-year yield and relative strength of the dollar. Now, at the moment, we've got the 10-year yield rising slightly, and I'll talk about this a little bit more as well. The relative strength of the dollar, now I posted some of the currencies because I wanted to point out that here we've got the relative strength of the Dixie is the US dollar, and versus these other currencies. So we've got the euro, yen, pound, and the Australian dollar. So with these, you can see, even though it's ever slightly the relative strength of the dollar down, it works like a seesaw with most other assets. So this pushes other currencies up. And I want to spend some time talking about this because moving forward in the near future, meaning the next few weeks, a couple of months, I think that the currencies will be the larger watch and movers for these markets, short of a shock or war. So, within the financial sector, I suppose we could say, we're going to watch these relative strengths of these other currencies, and with what they're doing, these are affected by the rate hikes. So with this, we've got cryptocurrencies are down a bit. Bitcoin still below the 58.4 level. So we'll be watching that. It's still showing some weakness. If we're fortunate, we're going to be getting another drop. And I'll also talk about Bitcoin a little bit later on as well. Right now, we've got the futures showing a bit of weakness. Asian markets were down, mixed a bit, and also the Euro markets because only the US market was closed. So, with this, looking at the larger picture of what could happen, the sentiment right now is that it's volatile. We'll be watching jobs numbers, and seasonal weakness, which typically happens in September. So, as I said, we're more watching currency moves as well as bonds and what they're going to do with these rates. So, we've got unemployment now, the Fed's biggest enemy, according to this story, not inflation. So, we're no longer, even though we've got inflation numbers coming out, and we'll be watching the reports, unless they're way out of their range, I don't expect they'll have much effect as far as moving the markets, not as employment will. Now, Fed Chief Powell signals at the Jackson Hole that a weak August jobs data could punch ticket to a half-point rate cut. So I want to bring this up because if the August jobs data is indeed weak, especially significantly, this would feed this thought of the market that they're going to get larger rate cuts more frequently, and so the stock market will boom. So again, here with the jobs data, people losing their jobs will be positive for the stock market. Again, none of it makes sense. So let's go back to our calendar for a moment. I want to talk about what we're expecting coming up. So today closed. Tomorrow, Tuesday, we're getting manufacturing PMI. Wednesday is going to be significant for a couple of reasons. Now we've got the trade deficit coming out early in the morning, and I'll talk about that in a moment. Job openings, of course, that will be large in the view. Now, the trade deficit, and I spoke about this last week, still here, basically the trade deficit increasing also is a side effect of these currency inconsistencies and the imbalances. So as this trade gets imbalanced, if you will, it also affects those currency balances, much like the relative strengths to each other, like a seesaw. Okay, with this, we've got Thursday ADP employment and jobless claims. Those will be big to watch. Also PMI, but not so much. Friday, more employment reports. We know these numbers are skewed, but we also know that whatever the numbers are, as skewed as they are going to be what Powell uses for justification for whatever action he takes. Okay. Now, with this, just want to bring this up for some companies still reporting their earnings this week. So we've got a few on here significantly watching Big Lots. There is a huge bet against them. They've been struggling, trying to stay barely above financial water. They are in talks about possible filing for bankruptcies. That one's going to be significant. And then we've got a few others that will be C3 AI, that's artificial intelligence, ChatGPT. So looking at some of these, let's move forward. Okay. Want to urge in all of this turmoil and what I've been talking about is to buy real assets. Don't leave your money. Although right now there is an urge to hold on to cash. That means physical cash in your possession, not in a bank. So hold some cash in order to buy for the incoming sales that are going to go across asset classes. And with this buying real assets, right now, as I was saying, Bitcoin is at a weak level. Now, if you'll notice, this chart is significantly lower than what it is currently. This is about just under the 26,000 level. The reason I've got this here is because this was from last year, and I had posted this before. This happens to be one that I kept. Everyone was talking about how weak it would be, dumping, and I took a lot of heat for this, for saying that this was on sale at the time. Now it's more than, it's right at about double this cost. I don't think it's going to hit this level again. Nobody knows for sure, but this was a good buy at the time. So seeing similar now, we're hitting that 58,000 level. Not financial advice, just my opinion, but we've got some good buys coming in. If it goes down to 56, 54, particularly 52, if we're fortunate enough, those are going to be buy levels for myself for sure. A few stock specific things I wanted to bring up for those that are traders, or if you're trying to keep an eye on the big picture of the real economy and not just leave the news up to these people that are twisting it and also showing you only a portion. So, as we were talking about, stocks are beginning to slip as traders brace for September swings. Like we said, very volatile. It's seasonal. There's looking forward to what they have to do. The larger money has to rebalance. Toward the end of the year, we've also got elections coming up. So, in the larger picture of all of these things, tremendous amount of volatility. I think this will follow through minimum to the elections. Want to bring up a couple of other things. We've got a possible merger between the airlines. So that's going to be positive for them, but this is saying they could hit a snag. If they do, they're going to drop again. Okay, we've got Tesla in the news two different ways. Now, first off, we've got Ross Gerber. Now, he's a large holder of Tesla stock, but he's saying he plans to exit his position because he sees the stock as overvalued if it doesn't hit he says, certain deadlines within the next 6 months. So that's negative for it, of course. But then at the same time, it just came out, Elon Musk is not just an electric vehicle company. He's always got more going on. So T-Mobile customers will get Starlink satellite internet to their mobiles first, and then other companies later. So of course, this is going to be good for T-Mobile and then also the SpaceX sector. So just to let you know about what's going on in the background. So I'd like to mention also Boeing has been a lot in the news lately, very negative press. And I think they're being set up for a couple of reasons. I think there are some things in the background going on here. But at any rate, the latest news is that they could possibly be facing a larger strike by there's a multitude of workers, 32,000 workers. And uh, my personal opinion is they're doing this at a time when the company is weak and they're looking to scale back anyway. I think it's maybe not necessarily good move timing wise on their part, and we've got a lot of unemployment coming forward. So we'll see how this works out for them. Want to keep an eye on this. As far as the move of Boeing, I think they were one of the few larger companies that did not take subsidizing during the last major issue of C-19. So maybe they're possibly getting set up for that taxpayer dollar inflow. We will see. So with this, I want to go to the spending, the real economy. We've got Canada spending per person less, falling at recession pace. You know, they've got a lot of issues there as well. And I think they're just a harbinger prior to what the United States is going to go through. They are taxed more heavily and they're suffering steeper inflation. So I think they're going to be one kind of to look forward to as an example of what is going on. The last thing I would like to mention is Japan's defense ministry seeing a record budget as they face growing threat from China. So more of their tax dollars basically pouring into defense because we are in a war economy. There was also more raids that went on, more bombings in the Middle East, more things going on with Gaza. Now there's protests going on because some hostages were discovered expired. And so there's just massive unrest, and they're feeding this because the war machine continues. We've got this and the political distractions as we get closer to November. I expect more of this and more volatility. So I wish you a good trading week ahead. We will be seeing you in the mornings prior, and I'll try to update you on everything that I can. So until I see you again, my friends, stay free.